Today, it is my pleasure to inform you of an incredible investment opportunity in which case you could triple your money within 18 months. Let me explain. So, Oz Minerals, which is a major copper mining company in Australia, has signed an option agreement with ASX listed Havilah Resources, a copper junior and developer, to acquire Havilah's Kalkaroo copper deposit for $205 million within 18 months. Now, this also includes a contingent payment of $65 million should Oz Minerals increase the copper resource by 30% in the measured and indicated categories. Now, if you look at Havilah's deposit, there's a significant resource within the inferred category, and the term sheet indicates that simply upgrading this into the measured and indicated will trigger that payment upon exercise of the option. So I certainly believe that this is achievable and that this is a $270 million deal. Now, currently, Havilah's market capitalization is around $90 million in the 26 to 30 cents range. And naturally, should Oz Minerals exercise this option, triggering the $270 million payment or $205 million payment, however, I was going with the 270 based on my previous explanation. That is around 3 times the current market capitalization of Havilah Resources. So that's why I expect Havilah to triple, if not more, upon exercise of this option within 18 months. Now, the key risk here is, will Oz Minerals exercise this option? Well, I think that the answer is more likely than not. Obviously, take that with a grain of salt because I can't predict the future. However, I think that it's more likely than not, as Oz Minerals intends to make significant investments within this option agreement, which also will involve a lot of drilling of the Kalkaroo deposit itself, as well as funds for exploration around the Kalkaroo deposit, so in the area of interest, which is the surrounding tenement areas. This funds could involve at least $9 million for exploration, in which case, if there is a discovery, simply in a simple explanation, without going into the specifics documented in the term sheet, it will become a 70-30 split mining joint venture with Havilah retaining 30% interest, free carried until a decision to mine. So it's a very good, promising agreement. And overall, this is an outstanding deal for Havilah Resources. So the shareholder meeting will be held within 90 days, in which case the shareholders will vote. I certainly expect a resounding yes in favour of the deal. There also will be an independent expert involved to determine if this deal is fair and reasonable. I expect that to come through as a yes, as there is substantial risk to Havilah in terms of funding, dilution, etc., in trying to develop this project on its own. So I certainly believe that this deal is in favour of the shareholders. Now, there is also another part of the deal which involves an additional $135 million. However, that payment could be deferred to up to 6 years away from the exercise date of the option. So most investors probably won't price that in. Now, however, after the shareholder meeting and the yes vote, presuming that that is the case, I certainly think it will be, then that's when we will likely see some of that investment funds trickle in from Oz Minerals for the exploration and development, essentially. So that's when I would expect to start to see some traction with the Havilah share price, as it potentially won't go up to 200. The market cap shouldn't rocket up to 200 million necessarily. However, you might expect some increases in the meantime as investors try and price in the value of this deal in a risk-reward sort of basis. And I certainly think that at least 100 million, so half the value of the deal, um, should be the share price at least. Now, I certainly think that the deal is very favourable. Oz Minerals is also getting a good deal as they're only paying $270 million for an outstanding resource. It has a lot of value in terms of contained copper, and previous feasibility studies indicated a 500 million minimum to $2 billion net present value. So it's certainly good value to both Oz and Have. Um, and that's why I expect Oz Minerals to exercise this option after they complete their mining study. If not, then certainly we'd probably expect Oz Minerals to have spent quite a lot of money on exploration, resource upgrade, and Havilah can retain these feasibility study. So certainly Havilah could potentially develop this project on their own, should Oz Minerals terminate the agreement. However, I'd certainly think that Oz Minerals, after having invested so much, would want to exercise the option. Now, there's also the risk that Oz Minerals terminates the agreement earlier. However, why would they go to such an effort in making such an agreement only to terminate it prematurely without having completed the mining study, etc.? So I don't think that is too much of a worry for me personally. However, you may want to evaluate the risk and reward on your own basis, on your own terms, I should say. And now, in terms of upside, so I've already suggested that the share price could triple within the next 18 months, potentially climb earlier in advance as Oz Minerals begins exploration of the Kalkaroo deposit, and Havilah commences further exploration studies in the area of interest, and also on their Muturu copper cobalt project, which is outside of the area of interest, so that's not part of the agreement. And this is where even more upside could potentially come in if you are a long-term investor and not just interested in tripling your money. You want at least 10 times your money. Well, if say Havilah decides to hold on to that money and those funds, they could potentially finance the Muturu copper cobalt project, which has a significant resource in itself: 195 kilotons of copper and 20,000 tons of cobalt is contained within an open pit model with some underground resource as well. So certainly I believe that will be quite a high value project, and we could see a net present value certainly in the hundreds of millions of dollars there, based on the copper resource and the significant cobalt resource. Obviously, cobalt has a very high price at the moment. Not to say that it will do in the future. However, that certainly the cobalt grades are good, the copper grades are good, and you've got the low cost open pit starter to that project. So I think that the feasibility study would be quite positive for that particular deposit. So I certainly see if Havilah does develop that project, we could see a even more upside, perhaps Havilah eventually reaching a $1 billion valuation. And also in the interim, we don't have clarification, but I presume that Havilah's spin out New Energy, which is their uranium holdings, will spin out into a separate ASX listed entity, New Energy Resources, I think it's called, in which case Havilah previously indicated that they would perform an in-species distribution, so existing shareholders will receive some of those New Energy shares. So that's quite a value-adding opportunity. Not sure if this is still going ahead. I hope so, as I would probably just sell those New Energy shares perhaps straight away or at a peak in their expiration, and reinvest that back into Havilah or another opportunity. Right. So that's my strategy there with the new energy. And also, what I find very interesting is their iron ore deposit. So, the Grants iron ore deposit, for example. So they have two iron ore projects, um, and one of these projects contains a 270 meters thick intersection of solid iron ore from surface at a pretty reasonable grade, so above 20% contained iron. So that's very significant. And they have an exploration target of 3.5 billion tons on this iron ore project. So that puts it up there with, magnetite mines. Horsens also comes to mind. HIO, as you can, if you look at the charts for Horsens, you'll see a huge run up in the share price. Now, this deposit is potentially, right up there with the Horsens project. For example, as the grades are actually superior here, and you've got the significant open pit with low strip ratio starting from the surface. This could be a huge game changer for Havilah in terms of value, no matter what they do with it. If they joint venture it, spin it out as a separate entity, or potentially develop it themselves, there could be a very substantial upside based on their iron ore project. So I certainly think that there is a lot of upside to the Havilah share price. So certainly do your own research and check it out.